What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to all those who continue to do so. If you haven't already, make sure you hit that subscribe button, notification button as well. That way you are alerted when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos like tonight's video mostly focus on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term trades or leap trades. So if you want to deeper dive into exactly how we set up our charts with the broadening formations, different levels of support and resistance, things of that nature, go ahead and check out that bonus content on our YouTube page. It dives deeper into how we do that. So I do encourage you to watch this full video because aside from just the triggers and targets that we give on short-term time frames, we give some pretty good insight into the price action on all time frames. So with that, let's go ahead and get to the agenda for today. First, we're going to recap the price action from Thursday, January 15th. Then we'll zoom out like we always do, take a look at the week, month, quarter, and year. Then we'll look at the market maker's expected move for Friday, January 16th, before finally zooming back in, setting the 4-hour markers and the triggers and targets for January 16th, Friday, January 16th, as well as the triggers and targets for the week, month, quarter, and year we'll review as well. So let's go ahead and get into today's video. First, looking at the 5-minute chart like we always start with. This allows us to take advantage of our proven and repeatable strategy that we use. If you're not familiar with this channel, long story short, and we'll get a little bit more detailed with this a little bit here, but overall, just the general rule that we look for, or that we follow, is higher lows at or above opening print, we get into calls, and lower highs at or below opening print, we get into puts. So opening print is just the first traded price of the day, and that's the main thing that you need to keep track of. Now, your targets for those moves, right? If you get calls off of the higher low at or above the opening print, you're going to want to look for overnight high and previous high a day. Whichever one comes first is the first target. Whichever one comes second is the second target, and that's really the proven and repeatable strategy in a box right there. Right now, if we go past those previous high a day, overnight high, things of that nature, then we've got triggers and targets for higher time frames that we'll go over here as well. But if you're just looking to get a better winning percentage when it comes to scalping, or if you want to get better entries on trending plays for like a full day trade, this is the way to do it. And we can see with today's price action, obviously we opened above previous day's high with the gap up, and we opened basically right at overnight high. So those two targets, were kind of thrown out the window if we were going to go to the upside. At that point, we would need to look at the 4-hour triggers and targets, the 1-day triggers and targets, possibly even the 1-week triggers and targets with how much we gapped up today or this morning. And so you can see here this peach dashed line here, small dashed line that says labeled price level 1. That's our opening print. And you can see, got the open, pushed down a little bit, bounced off of this 200 fib of the holiday bull flag, and went back up and tested overnight high. Now, if you notice, there is a 4-hour broadening formation coming through here. This gray gray diagonal line coming up through here, and we went right to it and rejected off of it. Now, broadening formations, trend lines don't put very much weight into. Broadening formations, a lot more weight into those just as the foundation of our trading method. But when they line up with other horizontal levels like overnight high, they generally tend to be even stronger. So we did get the rejection there, and it proceeded to get this lower low. Let me get my mouth right. We proceeded to push down, make this lower high, and then higher low. And we've talked about that before. It's just consolidation. So nothing really to do there during those 20 minutes or so that we moved sideways along opening print. It was just basically a fight between the bulls and the bears, saying, which way are we going to go at this point? Are we going to continue to go up from this gap up? Are we going to push down and start testing other levels to make them levels of support. And we got the latter, right? We pushed down, made this lower high, proceeded to make a lower low, lower high, lower low. Now, as soon as we started to come back up, you could see that this was kind of a, bounced off of it once, twice, 3 times. Okay, it looks like this 200 fib line is going to be some pretty good support intraday. So do we want to get into calls at this point, thinking that we may take off for the rest of the day? Well, we're still below opening print, so that's a little bit harder decision than just black and white, right? That does technically violate our rules of we look for higher lows at or above the opening print. So if you wanted to take on a little bit of added risk, you could have taken this bounce off of the 200 fib extension of the holiday bull flag, and that would have you would have just had to that's your risk reward profile, right? Probably want to keep your stop a little bit tighter at that point, especially you go up here, you make this higher high, you make this higher low. Okay, if we go back below those higher low, it's back below opening print, we're probably going to be going back to the downside. And that's really what you got, right? You got the sideways action, basically, where it just fought over this level basically the whole day. But by the end of the day, we went ahead and put this lower high in on the 15-minute. Let's switch to that real quick. And it was just a very subtle lower high, very, by cents, right? We had, was it the, I thought it was the 15. Let's check the hour. Yeah, okay. Sorry, there we go. We had this hour, right? And it was this that really kicked it off, right? Because I'm trying to just make this bigger for those who are on phone, right? We've got this higher high, we got this higher low, but now we've got this lower high. Okay, if we break below this higher low, we should be going back down to the downside, at least short term, because that starts a downtrend. Lower high, lower low. Now, if you wanted to take on the added risk and enter as soon as we broke below this 2 up right here that locked this in as a lower high, right? That would have been the best entry that you could get, and then just ride it all the way down. We happened to take on that risk because, we opened the day pretty well. We had contracts expiring. We had call contracts expiring next week as well as February, and let's just say we made some very good profit this morning. So again, we never play with quote unquote house money, but we did take on a little bit of added risk just because of the where we thought we were in risk to reward profile, right? We have this gap, the rest of the gap remaining from this morning, and really a lot of room to put in a higher low, even on like the hour time frame, right? If we come back out here, we come all the way down, back down to 53 before we would make a lower low. So there's plenty of room for us to come down and make that higher low. We did end up exiting about 80% of that position when we hit 58.04 before close. There was a little bit of a bounce, so we didn't, there wasn't any adding or anything like that we did at the end of the day. But we still got a long ways to go before the higher low, so we did go ahead and hold on to that last 20% of that position, and we will be swinging it into tomorrow. So we'll see what happens. If it works out, it works out. If not, then it doesn't. But we had a pretty decent day today. So just looking at it from this intraday perspective, we've got that higher high on the 1 hour, plenty of room to put in the higher low. Same thing with the 4 hour, right? Let's get a better chart out here for us. Right, we got the higher high after the higher low, and there's still plenty of room to put in that higher low, right? So we got this gap to the downside. Another reason why we went ahead and swung that last 20% of the position. Let me make this bigger. I forget sometimes. There we go. But yeah, you can see here coming from the higher low, we got the higher high. So obviously in an uptrend, ran into these levels of resistance, right? The 150 fib of the November 2025 range almost got the full gap closed, but we have this monthly broadening formation up here, playing with the daily broadening formation. Once we started to pull back, we were already above market makers expected move high for the week. So you could see why there was, resistance today and sideways to downside action, right? Just digesting the move that we made overnight. Because if we look at the day chart, right, obviously we put in that higher low yesterday. Oops, there we go. Here we go. We put in that higher low yesterday or Wednesday, January 14th, and popped up, right? We're just continuing this uptrend. And it's coming from the breakout of this range that we were in for the last, 3-4 months of 2025, right? We got that higher low, got this is the holiday bull flag. When you hear me referencing the holiday bull flag, let me just pull that out for anyone who's not familiar with this channel. There's your bull flag, right? And you can see we went up and hit that 200 today. So, it was a very productive day in both directions. Hopefully everybody was able to capitalize. Hopefully people were in swings and didn't have to try and chase this morning and only had to worry about, setting a sell order instead of trying to, chase everything. But that's to the upside. Had obviously had some good profit, and then the opportunity for that downside action in the afternoon. Another reason why we stayed in those that last 20% of that position of puts, you can see on the internals, right? The tick, it was positive towards the beginning of the day, but then it just rode the zero line the rest of the day and then finally went negative. Vol QD, basically money going in versus money coming out. It was positive, but it was not really anywhere near trend higher zone, which is up here at 400 million. And then you can see in the afternoon it tapered off as well. Basically, people taking profits, right? ADQD, yes, it was positive, but again, nowhere near trend higher zone. And towards the end of the day, it fell off as well. So, remember to use those internals to your advantage. These are the internals for the QQQ specifically. I wouldn't use the internals for SPY, but for QQQ. But that's just another way that we can, basically keep things in check from an intraday perspective and not get into chasing plays or anything like that. All right. So that's what we've got for the day. Let's just zoom out real quick. Look at the week. We're pushing up, right? We're doing what we're supposed to be doing. Obviously coming up, pressuring this monthly broadening formation, this green diagonal line that comes through here. We've broken through the two weekly broadening formations, the purple, and we've got a steeper one here. So 70.08 again is that target on the quarter and the year. And if we go up to 70, you can see how these monthly and weekly broadening formations are converging. So that would be a reasonable spot outside of just the STRAT reversal that we're in on the quarter and the year. A reasonable spot to see action kind of slow down, move sideways, or even pull back a little bit to set new levels of support. So from the week perspective, we're in an uptrend. Not a whole lot to say there. If you've been following this channel, it's been the same thing on the week and up chart for a couple weeks now. So not a whole lot to say there. If we look at the month chart, let's get a clean chart out here. Right, again, November is now a higher low. We've made a higher high. So from a month standpoint, we have started an uptrend. Again, we are running into this monthly broadening formation, so we do want to keep that in mind. And then the 70.08 target up here looks like where we should be going. If we go to the quarter, this is what I was talking about as far as the STRAT reversal. If you're not familiar with the STRAT, we will make available a link to a quick reference PDF in the description of this video so that you can go check it out. There's also a very big STRAT community out there on the internet. So it's been around for a while. It's proven, and there's a lot of information out there as well if you're not familiar with it. But anyway, getting back to the chart, you can see we have the 1, which is an inside candle, combo 2 down, combo 2 up, triggering at the high of this first 2 down, magnitude being the high of the candle to the left of the 1. That's up here at 70.08. You can see we are on our way. We talked about it at the very beginning of fourth quarter 2025. As soon as we triggered that, getting above this 36.15. We said that it would probably take more than a quarter. It's actually got there a little bit quicker than I thought it would get there. We're not even halfway into the first quarter. We're 2 weeks into the first quarter, and we're almost to that magnitude. So just continue to watch that. But still in an advantageous position from the quarterly perspective, and then on the year, we talked about this as well. It's not so big, but last year was a 2 down. We went 2 up at the beginning of the year, kicking off a 2 down, 2 up reversal. The magnitude for that move is the high of the candle to the left of the 2 down. So again, that 70.08 level looks to be the magic number, right? So that's what we've got from a higher time frame. Let's go ahead and take a look at the charts and the actually let's take a look at the market makers expected move for Friday, January 16th. To do so, let's look at the options chain for January 16th, the week of January 16th. I've got Thinkorswim up here. Here's the January 16th options chain. And if we look over here to the right, we've got a number in parentheses. It's plus or minus 2.82. And that is the market makers expected move. They expect a move of plus or minus $2.82 in Friday's price action from the close of Thursday, which was 58.08. So if we go over to our notes here, we can see, right, 58.08 was the close. You add $2.82 to it, you get 60.90. You subtract $2.82 from that, you get 55.26. So we have an expected range of 60.90 to 55.26 for the price action on Friday. What that would mean, if we stay within that range, is that we would either be an inside or a 2 down day, right? So let's go back to the chart here. Let's look at the got this chart up here, and what did I not have? Oh, my bad. Let me get the right chart. Right, so we have the as we can see, we have previous high a day. The high on Thursday, January 15th, was 61.66, and the market makers expected move high for Friday is $60.90. So obviously not going above Thursday's price action. So inside candle or 2 down. You can see previous low a day is 58.04, and the market makers expected move low is 55.26. So that would imply that we would have a day of pullback, which again, not the end of the world. We just gapped up immensely, and we've been running, right? So we're in an uptrend. Just nothing to worry about. Just look for your pullback longs, and unless things start to change. But you keep an eye on your smaller time frames, your time frame continuity, week, month, quarter, year. They're all green. Just keep that in mind, that a pullback is just a pullback. We've got this gap that we can fill and still make a higher low and continue this uptrend, right? But again, the market makers expected move high 60.90 to 55.26. All right, let's go ahead and look at the chart for tomorrow and setting up our proven and repeatable strategy for the morning's price action. You can see on the chart here we have, let me make it bigger. We got previous high a day up at the top here, 61.66. Overnight high for right now, 59.36. We don't know what it'll be at by the time we open tomorrow, but 58.04 being the previous low a day. And then actually, I'm gonna make this a little smaller. And then we've got an imaginary overnight low of 56.64, essentially the 161.8 fib of that holiday bull flag, right? So if we I got the price. So if we get price that opens, let's say, in between that overnight high, overnight low, if we open and we push up, maybe get a little rejection off of this hourly downtrend line, and we pull back, but then we make a higher low at or above the opening print level, and we start to push back up. Once we get that higher low, we want to get into calls. First target being overnight high, second target being previous high a day. All right, same thing to the downside, right? If we open and we push down, maybe we bounce off our overnight low and we push back up, but we get the lower high at or below opening print. You want to get into those puts. And you're obviously already below previous low a day, so overnight low would be the the target for this particular strategy. If we reach that level and we continue with momentum, then obviously we turn to the 4 hour and the 1 day for our further targets. But for all intents and purposes, for a scalping perspective, especially early in the morning, or if you're trying to get an early entry into a trending day move, then we're looking for higher lows at or above opening print, looking to get into calls. And if we get lower highs at or below opening print, we want to look to get into puts. All right. Let's go to the 4 hour chart and look at things from more of a day trade perspective. All right, I think I've got this big enough for everyone here. So these are the fib extensions for the holiday bull flag right here, the light blue ones. You can see we've kind of got a lot going on in here from an intraday perspective. I had to get some more levels out here just because of how we've been pushing. So it did make it a little bit clunky, but let's just clear things up a little bit. There we go. If we just look at it strictly from a strat perspective, we had a 2 up, 2 down on the day, triggered, on the 4 hour, which triggered this 2 up, 2 down. We had a 2 up, 2 down in the 4 hour candles today, which made a combo 2 up, 2 down, right? So if we go to the downside in the first 4 hour candle of Friday's action, that triggers this combo 2 up, combo 2 down now. So this 2 and this 2 combine to make a 2 up, and then this 2 and then the 2 down, the next 2 down would combine to make the combo 2 down. The magnitude for that move would be the low of this 2, the first 2 in the combo 2 up. So down here at 53, basically. But do recognize we are in this uptrend. We do have this gap to fill. So, if we fill the gap, we fill it. But look for support around, last week's high, which is basically the 54, 55 area. If we don't get a bounce there, then okay. We can continue to play things to the downside. And I would probably look for, the strat to complete and possibly even test the opening print of the week. But I think we would have to have a pretty big catalyst to get us down to that level. So I don't know that we get that far, but SOXL can really run in a day. So we want to just make sure that we're aware of where things could go. If we go to the upside, then obviously we triggered this 2 down, 2 up. Not a lot of magnitude there, right? We enter at the high of the 2 down, the magnitude being the high of the 2 up to the left of there. So not that much magnitude from that standpoint, but that would put us back into the gap that we're trying to close and, possibly get to pressure that monthly broadening formation, right? On the day chart, oops, wrong thing. If we look at the day, right, we can see obviously today gave us the 2 up to lock in Wednesday as the higher low. So if we go to the downside, we just got a simple 2 up, 2 down, obviously triggering at the low of Thursday, the magnitude being the low of Wednesday. Right. If we go to the upside, 2 up continuation, obvious entry at the high of Thursday, but now we've got to look at we don't have a strat reversal, so there's not a clear exit. We've got to look for our horizontal levels of resistance, and you can see the 161.8 fib of the November 25 range, as well as the 200 fib extension of the April 7th bull flag. Those are kind of lining up here at in between 63.80 and 65 flat. So between 64 and 65, that's where I would look to see your next level of resistance. Again, market makers expected move high is 60.09. So anything above Thursday's high would be kind of a cherry on the top from that perspective. But don't expect it to run too much more. I wouldn't expect another gap up tomorrow, and especially no gap and go. But if we do continue to the upside, we continue to the upside. We just take our triggers and targets. That's why we don't make predictions. We just give our triggers and targets for both sides of the equation, and whichever one triggers we go with. So let's go ahead and take a look at the notes. Kind of looked at a lot of charts here today, so we'll just finish out with the notes. Don't want to take up too much of anybody else's time. We've talked about the market makers expected move for Friday. We're obviously getting towards the top of the market makers expected move for the week. We already poked above it, so do we kind of stick to that level as kind of a magnet like the 60 flat 59.50 to 60 flat level, possibly. And that kind of goes with the market makers expected move high for Friday overall. But anyways, we've got the gaps above. Obviously, that gap above is slimmed out. The only one that we had left was slimmed out today when we poked up into it. And then we have our gaps below, which includes the new gap from this morning as well. On a scalping perspective, early entry perspective on a day trade, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. On the 4-hour chart, we talked about to the downside, that would trigger a combo 2 up, combo 2 down at 58.01. Magnitude for that move is all the way down at 53.17, and because we are in this uptrend, it could be pretty hard to get there. So we've got these levels of support where we could bounce. To the upside, we would have this 2 down, 2 up on the 4-hour, triggering at 61.22. Again, not a lot of magnitude, ending there at 61.67, but that does put us back into the gap. Gap closes at 62.23, and we've got some extended targets out here if we get to really running. On the day, we would have a 2 up, combo 2 down, triggering at 53 flat. Obviously, sorry, that should be 53.17. I don't know why I was put 53 flat. Right, the magnitude of the 4-hour move is the kickoff of the daily move. So triggering at 53.17, magnitude being 52.35. If we get really pushing to the downside, we've got these extended targets out here as well. To the upside, like we talked about, it would just be a 2 up continuation, triggering at 61.67, and we've got these extended targets, obviously 62.23 being the gap close out there. All right, from the week's perspective, again, we've talked about how we triggered and are in force in this 2 up, 2 up. We triggered at 54.76. We've reached the first 2 targets, looking for that last one there at 62.23. That's the one that I think we could actually get tomorrow, possibly 63.94 if we get some crazy catalyst, but don't quite think we'll get that 65.04, but we've got it out there in case we really start running. Anyways. A long ways from 48.13, so the red 3 or the bearish engulfing candle is not in the picture for tomorrow for this week. For the month perspective, we already ran the 2-1, 2 up, triggering at 50.09, magnitude being 50.19, locking November in as a higher low. So now we're just looking for that gap close and these extended targets on the way up. On the quarter, again, we triggered the 1, combo 2 down, combo 2 up. This month to continue that, right? This quarter to continue it was 50.76, but the origin of that 1 combo 2 down, combo 2 up is 36.15. So as long as we're above that level, we're still good. And the magnitude for that move is 70.08. Again, long ways to go. So we've got the gap close as well as a couple other intermediate targets on the way up to that level, but looks like we should be there pretty soon if we continue this run. And on the year, we triggered the 2 down, 2 up at 50.76. Again, that magnitude being 70.08. If we get past that, then we're looking at all-time highs. The next target 74.21, and after that is blue sky territory. So we just would have to manage it from there. So that's what we have for today's triggers and targets and charts and whatever. We tried to jam in as much information as we could without taking up too much of your time, so we hope you enjoyed it. This is a free channel, so we do just ask that you give us a free like. We think it's a fair exchange, and it just goes to help reward us for the work that we do put in. We're not asking for any membership fees or anything like that. So a like goes a long way. We're always open to any type of comments. Obviously, positive comments are well received, but even what would be considered negative comments, or if you have something that you would like done differently in the videos, definitely let us know. Especially if it's done constructively and you're not just coming in and hammering us, telling us we're the worst thing in the world, then it's a lot easier to receive. And we've already done changes to the flow of the video to help some people out in certain areas. So it's always something that we're open to. But anyways, that is what we've got for today's video. I hope everybody enjoyed it. We'll go ahead and end it here like we always do. If you're watching this Thursday night, we hope you get some good rest tonight. Wake up refreshed tomorrow. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.